we've been given a bit of a task. It's a fireside chat between two very different experiences in the space. So we're just going to be talking, and I think since it's an intimate group, we'll be open to questions the whole time. So
sounds like a plan. Yeah. So should I just go first, or
yeah? Go ahead.
Hello, everyone. Good to be here. Just by way of introduction, I oversee the global digital finance strategy and operations for Moody's Investor Services, which is a traditional finance credit rating agency or an integrated credit assessment firm. What we are trying to do or achieve now is identify operational and technology risks that would overlay or act as a layer on top of the existing financial and business risks that we assess and evaluate all the time, be it issuances, be it issuers, institutions, corporates, sovereigns, central banks, everybody. And to add some more to my background, I've been involved in the blockchain industry since around 2014, 2015, founded and or co-founded and led the Center of Excellence for Blockchain at KPMG, based out of New York. And at Moody's, our priority is to find a way and understand how the ecosystem is evolving and how the infrastructure is developing for wide-scale adoption, and how the assets that will be issued on the blockchain add upon or add on to the existing risks for a full credit assessment of any assets or any issuers in the ecosystem.
Okay, background, I'm a former lawyer by trade, also a hacker. I went into Bitcoin in 2010. Prior to that, I was in Africa and Latin America doing mobile payments. I was a CIO at GE, ran all emerging tech globally, so think of cyber, machine learning, data analytics. And then in 2013, I brought Vitalik to launch smart contracts across a variety of use cases in enterprise. So the first trade finance deal that was done in the world was between JP Morgan and GE. That was part of my work. My catalyzation across the company and across our customers. So Amazon, Microsoft, and et cetera. So super early. I'm an investor. Ogroup is a fund of funds and direct investor. We also have a merchant bank where we work with startups and we focus on scale and growth and M&A. We are partnered with $6 billion of family offices. And we're really helping them understand where the technology such as smart contracts and particularly machine learning can be implemented in a lot of their work. So airlines, commercial, residential, real estate, e-commerce businesses, everything that kind of family offices may own, because there's tons of confusion, obviously, around that. So we've invested a lot in stablecoins, which is a topic for today. I'm on a board of CoinDesk and on a board of a couple of different companies, but that's me. So I guess we'll start with, and again, as I said earlier, is open, because this is a fireside chat from kind of an institutional point of view and then entrepreneurial point of view on the space and kind of why I came into the space particularly, and then we will be open to people just kind of jumping in and asking questions and making it a little bit more dynamic. If that's, yeah, that's okay.
Why stablecoin?
Oh.
Why stablecoin?
Do you want to answer it first and then I'll go? Yeah.
All right. So according to our research and our discussions across the ecosystem, traditional, centralized, and decentralized finance, everyone is looking for that one, for digital fuel, for that one stable digital settlement asset. Because no matter what you do, no matter what you place on the blockchain or in the infrastructure, unless you are able to settle on chain, everything defeats the purpose. Unbacked cryptocurrencies, because of their volatility, haven't been the best choice, and so came stablecoins. However, recently stablecoins have proven to not be as stable as expected, and we'll come to that maybe later during a chat. But so far, stablecoins are the bridge between the three ecosystems. Even with their risks, they are the only available stable asset that can be used. However, their market valuation is dropping and investors are finding new investments or new sources of investments to diversify the portfolio to more risk-averse options.
Yeah, I'll add to some of that. How many of you believe that stablecoins are the killer app of crypto? Okay, 4 people? Wow. Interesting. I think to your point, it's really interesting that how it started. We were large investors in stablecoins, and we found a really good use case in emerging markets for a period of time to a point where we thought, oh, wow, if we actually use stablecoins and remittances, particularly in the markets where currency fluctuates, it's a really good use case, right? We've seen it live. We've partnered with people. We see it used in mom and pop shops, particularly in places like Latin America and Africa. But then now, as you said, right, the utility of those stablecoins is dropping. And I'm wondering now with the increase in the previous panel, what they talked about, CBDCs, I have an aversion to CBDCs because I actually don't think they add an enormous amount of value as it's been talked about. And I think that they are just a pure surveillance state optionality for governments to completely track what you're doing. Yes, people will argue that you are currently traceable completely, and you can completely see what we're doing, but I think that CBDCs and mechanics of CBDCs allow them to do that in a full essence, which is the part of the reason that European Union for a while has been playing a game of being against big tech. And the only reason they were against big tech is not really to protect the privacy, but it's to really come out on the top as a big boy, because they wanted the CBDCs themselves, right? So they said, okay, we're not going to have Facebook or PayPal, right? You all remember how much of a pushback there was when Facebook came up with Libra, right? But now with PayPal stablecoins, I think it's the same thing, right? They don't want the big tech. They want the ownership of the data, and they want to see what you're doing themselves, right? They don't want the technology to do it. So I think with stablecoins, I see the purpose of them going forward in the places like where it's issued by the government, right? And that's something we'll discuss as well in places like India and Brazil and everything else. And maybe you can chime on that from the institutional point of view.
I mean, if I can just make a comment, you mentioned PayPal. Everybody knows what happened with Libra and Facebook, and that led to a bigger discussion for CBDCs, which were that time probably never heard of by a lot of people, and also a lot of by countries were not looking into it. However, I wouldn't compare PayPal to CBDCs because they are mostly stable coins, again, backed by assets that are either short-term treasury bills or with fiat currency in the commercial banks, whereas CBDCs are going to be one-on-one backed by the central bank. So the stability factor still falls on the CBDC side of things. And that's the integrated risk assessment thought process on stablecoins versus CBDCs, where we think it's less risky to have a stable asset, be it a central bank or a government-backed, than a privately issued stable coin, which relies on money, either fiat in the commercial bank or short-term US Treasury bills and others, because of the real-world examples we've already seen in the past. So they do have their benefits, but I think they need to have or monitor their business models for long-term sustainability and how to keep themselves stable and not just depeg at a very small instance of any event in the real world.
So if I think about this a lot, if you think of Tether and then USDC, right, there were only, 2 times instances where it depegged from the dollar, right? I think, yeah, exactly. So if you think about that, really, if you zoom out and you not argue from one point of view, you say, okay, what's the purpose of these things, right? And the purpose is we were testing it when we were building the whole technology stack was to really get speed, right, and lower the cost. Really, that's really the bottom line. But problem with blockchains, as you know, it does give you, blockchains, as I would argue, good and bad, right? Because it creates full traceability on everything. So sure, you have ZKs and, and privacy and everything, but that's still so far away. So when I think of what you said now, I'm thinking, okay, is it just a matter of time where we have trust in these systems, right? Because over the course of 10, 12 years now, Tether hasn't necessarily failed us, right? So we're slowly building trust into the system. USDC the same way, right? So this is me arguing on the opposite side, right? So is it just a matter of that we're building these new institutions with faster railways, faster highways, but really it's the same financial system as we had before, just kind of masked, with more kind of surveillance and more traceability? Or do we support something like that, or do we go all the way to the other spectrum? As the previous panel said, the only answer to all of this is Bitcoin. I'm not really sure I believe that either, because currently, as I said, we invest in companies, and we've seen the real world impact of stablecoins, where mom and pop shops that hold local currency literally can shut overnight because the fluctuation of that currency is crazy. And because they held that stable coin, they were able to continue their business, right? But I don't think that that's forever, particularly with tokenization of real world assets and backing it by, let's say, oil in these regions, backing it by gold, right? Backing it by real estate. You still have fluctuation of those assets, but are they big swings? They're not big swings, right? So this is where I say maybe it's more reliable, and it's just a matter of creating these institutions that we can all place our trust in. I don't know, am I wrong, right?
No, yeah, you are right. It's also the whole point of proof of reserves and the transparency, which we don't see, right, with the backed up assets.
But we don't have proof of reserves and transparency from the banks today. How many of you have asked proof of reserves and transparency from the banks today? How many of you have called your bank and said, show me what you have? Nobody.
But you
right?
do trust the fiat currency in your hand, right?
This is what I'm saying. So it's over time that we've built that trust. So that's what I'm saying. Is it just passage of time where we are trusting this technology is going to do right by us?
The technology will. I'm not sure about the stable coins. And yes, stable coins are going to exist. They will coexist even after CBDCs, because there's still a question mark around CBDCs being able to interact with the decentralized finance ecosystem, because almost all of them, not all of them, but almost all of them are going to be built, or most likely will be built off-chain and not on-chain. So their interoperability could be a question mark that still needs to be resolved if they come to existence. So stable coins will still be that asset that will bridge the gap between the two ecosystems. However, it also goes to show the trust and confidence factor. The moment the yields in the traditional finance world went up, the total value locked in the ecosystem and the market value of stable coins did drop by over 40%, which goes to show that currently they don't have as much confidence because of the issues that they are facing with their linkages or interlinkages with multiple ecosystems, even if they are backed by proper assets. USDC, for example, no fault of theirs. A traditional finance bank had issues, and they were depegged for like a few hours, few days, till they got their money back. So that's the bridging the stablecoins role as a bridge between the three ecosystems of DeFi, CeFi, and traditional finance. Any issue they have, or any of the ecosystems or the stablecoins themselves, can cause contagion in the other three. That cannot be said about the central bank or the government-backed fiat currency at the moment, because they have found a way to have better ways to run the economy even in bad times. I mean, there have been cases where it has been difficult, but at the moment, trust and confidence is lacking, and I think that's up to the private issuers of stable coins and the ecosystem to build that trust in one way or the other.
Yeah, we have, I guess, 5 minutes. Maybe we can open it for questions. I know this is a really, really deep topic, and we were both wondering what, we could have gone so much deeper on technology or whatever, but they've given us 20 minutes. So if you guys have questions, we would love to answer them. I'm sure there are people here in the room who are familiar with stablecoins or wondering what else can we answer. Good. Okay. Yeah, I don't know who goes.
Very good insight. Thank you. My question is, which stablecoin are you guys actually mostly bullish on, or which stablecoin would be one of the ones which will make it, in your feeling, mostly long-term? And is there even a chance to perhaps that the country would convert it to a CBDC or might even use it as a collateral? That's
Can
my
we have
question.
another question too, so we can answer at the same time because of timing?
Thanks for the very interesting discussion. Perhaps just to build, and it's more of a proposition which you can frame as a question. You see a trilemma: trust and confidence, privacy, and speed of settlement. Currently today you have these issues with fiat currency, and when you scale it up, you have solutions such as stablecoins and upcoming retail CBDCs. I would postulate that it's really a case of coexistence driven by purpose and political agenda. So of course you will have central banks who will push for retail CBDCs, but you will also always have, given current banking models, commercial money. And there is a place for stable coins, which effectively are backed by that stable money. So I'd be grateful for your thoughts on that.
Yeah, I think if I understand questions correctly, first to go to this, to Matthias' question, from my perspective, look, there is no one winner. I think for me personally, Tether hasn't failed. Maybe I'm biased. You know, we bought the first bank for Tether. They haven't failed, right? No matter what people say about lack of transparency or whatever it is, that company hasn't failed, and it hasn't failed its users. It's been there all along. USDC the same way, right? Has it been a good use case? To our discussion, to our points here, it has been a great use case. Reserve, which is the currency that we have been working with, that works in Latin America and wants to work everywhere, they're literally doing God's job of banking the unbanked, so-called, right? So is there one winner? I'm not sure about that. There's tons of people coming up with stablecoins. Here's what I say as an investor. When I look at a use case for stablecoin, I don't care about technology. I'm not joking when I say that. Best tech never wins. It's the actual utility, and then to your point, how does it work in this trilemma of everything you brought up, right? How are you addressing a problem locally? What are you solving for, right? Are you working with regulators or not, right? Are you bringing the unbanked? Because remember, banks in general, everywhere in the world, to your point, have failed to a large extent to not onboard majority of people because they don't care. And so I think what we're seeing now around the world is banks going, wait a second, there are all these people we can bank, there's data we can extract, we're seeing their spending patterns, we can monetize on that, so therefore we need a tool. Oh wait, we don't have a tool, so let's go work with people that have created that tool, right? And so that's where a lot of these issuances and technologies come in of smart contracts, is they're looking for people in the payment space and fintech, not just in crypto, to work with them to onboard the unbanked and plus work on remittances, right? So in my case, there is no particular winner, but when I look at it as an investor, I look at how are you going to market, who are you serving, what is the issue, what is the trifecta, and how are you addressing what this gentleman talked about, because I think it's really important what you brought up. And then, you know, how are you working with the banks, and what is your end game, right? Do you want to sell into the banks and get all these millions of people that you have using your tool, and kind of what is the purpose of your tech, right? So that's kind of me. I don't know if I've specifically answered your question, but I'm happy to talk after. But I don't think there's a competition. I think they do coexist, 100%.
I agree with the last comment that Maja made, but I cannot choose one in my role at Moody's, and as Moody's, we are an independent entity in the traditional finance world. So, but stablecoins alone cannot solve the problem and cannot lead to widespread adoption. We need more and more stable assets. Could be digital securities, could be tokenized deposits, potentially CBDCs. We still need to see the development, but stablecoins alone will not be the solution for widespread adoption of DeFi and digital finance specifically. There need to be more stable assets. To answer your question, I totally agree. Both of them will, at the end of the day, coexist. Maybe stablecoins market value drops, or maybe it goes up. We are yet to see what happens after CBDCs come into play. They do have their own concerns about privacy and anonymity on respective concerns on both sides. However, stable coins at the moment are not easily accessible either by a common man. You need to be a computer scientist or need to know how to play with decentralized or centralized exchanges in order to play with them. They're not easily accessible, and that's the major concern with stablecoins at the moment. Examples of retail CBDCs that we've seen in some countries already, they have provided an easy-to-use barcode app that you could just use to scan your barcode and use CBDCs just like you would use your fiat currency. But the same thing has not happened with stable coins. However, some institutions like PayPal and then Visa who are supporting this and making them available on their apps may lead to probably some kind of adoption amongst the users, not only for usage medium of exchange, but maybe even store of value over a period of time. Very, very early stages, but that is some innovative development in the traditional finance world, which will lead to something more positive for the ecosystem.
I think we've ran out
I
of
think,
time,
yeah.
But yeah.
All right. No, thank you for your patience and listening to both of us. We just went about and ranted whatever we could on the opposite end of the spectrum. Hope you all enjoyed it, but happy to meet off stage if there are additional questions or you want to discuss any topics. Thank you.
Thank you.